Hey guys, Justin with Deep Dive Stocks here, and today we're going to be taking a data dive into Ford. Ford recently has been in the news because the price is just going down and down. So we're going to look at the reports, and there's something pretty interesting about Ford that's worth pointing out because it doesn't happen too common or like commonly throughout the market, and it especially shouldn't happen on a stock as well established as Ford, but here we are. So let's take a look. The first thing we're going to look at is Verax. If you're not too familiar with Verax, I actually just put up a video on it. I would recommend checking it out. The takeaway point for Verax is that if it is inside of this zone right here, we consider a stock stable. If it is above or below, like it currently is, we consider the stock unstable. We can actually see this with Ford right here, where Verax drastically moves through the stability zone and directly into the propagation zone. This occurred on, I wrote it down, January 27th, and Ford's price was $19.55. When Verax goes into the propagation zone, it typically will, that means that the price that provoked Verax going into the propagation zone will be propagated. And in fact, that is exactly what happened. The prices continued to decline, and so far to date, it's fallen 16.43%. So pretty significant. Currently, Verax is still inside of the propagation zone, again, statistically relevant for continued and persistent decline in price. Moving through the report, we see that the snap graphs on the long term agree with this assessment. On the short term, there is a little bit of a bullish outlook in order. So on the 1 day, we have positive predictions per the snap graphs. On the 5 day or the 5 trading day or the 1 week, we also have positive predictions there. But then when we move to the 10 day or the 10 trading day, the 2 weeks, we have negative predictions as indicated by the crosshairs. And then the 20 day or the 1 month, we also still have negative predictions. The expected price range graph takes the volatility of the market and derives the 68% probable upper and lower boundaries for the price movement, and those are indicated by the dashed lines. And we see that for the most part, Ford is pretty well behaved. It seems like in middle January, Ford fell a little quicker than the market expected, and then again in the start of February. But otherwise, it seems like the stock is pretty well behaved, as I put it. Recently, however, it seems like liquidity is diminishing from Ford and volatility is rising. It's pretty high. So the peak, it's almost reaching its near peak that it had in January. The shorting behavior is decently interesting, nothing terribly to write home about, but there is a steady increase lately in shorting that has been occurring. Nothing crazy though. The options layout is also not that spectacular, except we're going to add a piece of information later, so keep that in your back pocket. But we do have a decent normal distribution curve for the calls. We have a healthy amount of puts on the downside, and we have not a terrible amount of options being open today, but so again, not too exciting. So what makes Ford so exciting, and why am I making a video about it? This guy right here. So this is the hedging matrix. The hedging matrix determines or shows us how many shares have to be purchased or sold for every point move. So every point that the price moves and point that volatility moves. And there's something that's particularly special about Ford's hedging matrix right now, in that it is the direction of hedging, whether or not it's purchasing or positive numbers or selling or negative numbers, is completely dependent on volatility. This is unusual because it indicates that the stock, and probably one of the main reasons that Verax is indicating instability on the stock, is because the hedging is being overly dominated by volatility. Typically, a stock's hedging direction will be solely based off of the price movement itself. So for instance, gamma squeezes are significant because the hedging is in the same direction as the price action. So if the price goes down, the hedging has to sell. And then a normal stock that has positive delta and positive gamma, when the price goes up, hedging occurs in the selling direction, but then as the price goes down, hedging occurs in the buying direction. Here on Ford, we see that the buying or the selling is completely dependent on volatility, and this is incredibly destabilizing because volatility is ethereal, right? Like it kind of just moves around however it wants. And look at how significant these differences are. So like, for instance, if the price increases while volatility increases, for every point move, you have to purchase 1.5 million shares of forward in order for all these options to be hedged. Versus if the price increases and volatility decreases, well, then you have to sell 440,000 shares. That's quite the difference just in if volatility rises or if volatility falls. And lately, we said that volatility has in fact been rising. So what's the concern here? Well, as the volatility started to rise in the middle of February, note that that's also when the trajectory of the price decline kind of started to level out. So the concern is the leveling out of Ford's price right now only because there's been a flux of this passive buying because of the volatility and how all of the options have to be hedged? So, and if that's the case, what's going to happen if volatility suddenly falls? Well, all that passive buying is going to disappear, and now a whole bunch of passive selling is going to enter the market, which may push Ford's price even lower. So whenever a stock is in a volatility controlled hedging matrix, things can get pretty violent pretty quickly. And it's not an easy situation to get out of because it's dependent on the level of volatility in the stock itself, the layout of the options, and where the price is in relation to the options that are overly provoking this Vanna exposure. So that's pretty interesting. And for, like I said, like a stock on Ford, pretty uncommon. The one stock that comes to mind that's kind of constantly in a hedging matrix like this is Clove. And it's kind of a newer stock. It's a little bit of a meme stock. So you expect some wonky behavior, but on a kind of established stock like Ford, it's pretty surprising to see this type of hedging matrix. And so that's Ford for you guys. I hope you enjoyed it. If I find interesting things like this, I'll definitely toss them your way. And that's Deep Dive Stocks Report, Data Dive on Ford. I hope you guys enjoyed it. Like, comment, subscribe, and I'll see you guys next time. Bye.